Good day, ladies and gentlemen, out of our studios here in Munich, Commodity TV, and I'm very happy and proud again to have here George Moen, the COO of Inca One. Yeah, you know, Inca One Gold, one of the most successful stories of the last 18 months. And actually, I remember when I had the guys the first time in front of my camera, the stock was trading like 8 or 10 cents. And what you have made out of this, congratulations, really.
Well, thank you very much.
My pleasure, absolutely. George, great what you have done. You and the team, of course, with Ed and all the people working for you. This is what the industry needs, people who deliver on what they say.
Yeah.
And we saw already some good movements in the last weeks with you, not only with the stock price, this is the second thing, but I think you are now really secure for the near-term future because you got the money in the bank, you did an additional financing. Please give us a short overview on that.
Yeah, well, first of all, it is a real team effort. I think the key area that we've done in the last 12 months is not only did we secure the financing, built the plant on time and on budget, but we secured a number of key hires during that process, including Jaime Polar and
he's an ex-Barrick guy, right?
Ex-Barrick guy, yeah, and he brought a few people in as well from his past, and it's that team that's really executed in the ground. And then we've also boosted our team in Vancouver with Oliver Fossey coming on as our CFO, and so we're building a team so we can expand under controlled circumstances, and so that they can deliver on that one. But it's really a team effort to deliver on all aspects of our business, both on the fundraising side and on the operations side of the plant.
Let's come to your operation, because we saw those beautiful pictures with those two nice ball mills in yellow, nice beautiful ceremony with the priest down there to the holy thing here. What is it going now? Because how is it going now down there? Because I saw in the press release you are now going approaching 60 tons per day in the commissioning phase, right? And so what's going on now?
Well, exactly that. We're in it's still officially in the commissioning phase, where it takes a few months to get all of the gremlins worked out of the process, and the ball mills were there. We had to do a few minor changes to the crushing circuit and boost that up, and for the most part it worked out well. But we found things, and we had to basically get each of the major components tested, and that's pretty much done now. So we'll be calling an end to our commissioning phase here shortly. And then what we call our optimization phase, where we are really now ramping up. So we've been operating anywhere from 40 to 60 tons a day, and getting that. Now we're continuous, with a couple of installations of a couple of key components. We're now a continuous production, so we don't have to shut down for harvests. And then from that point on, we move into what I call the optimization phase. We'll go from where we are today to full capacity, which is at 100 tons. And we're going to take, probably the next quarter, a little bit, maybe a little longer, maybe a little less, to do that. And then we start to try to really optimize, improve our recoveries, make sure we're not having any downtimes, et cetera, et cetera. So that is about to start, and that will be like the launch of what we call our commercialization phase.
What is the difference when you say commercialize, or let's say commercial production?
Commercial production is more of an accounting terminology. By our CFO will make that call, and he's analyzing all the numbers, etc. So at some point he will announce that, and then we then become our revenues are reported on a quarterly basis in a different manner, etc. But he can speak more to that. But we're entering that phase now, and we're getting really close.
What is your break-even barrier on a per ton per day basis?
Roughly, it depends on a whole bunch of factors, but we should probably be there close. Our internal numbers are showing it should be at around where we are right now. But
so something like 50, 55, whatever.
We don't have the final numbers in yet. We're about to release our quarterlies, but they won't have the full quarterlies or the ramp up phase. So we'll know in a couple of quarters whether those are the right numbers or not. I know we're pretty comfortable.
Yeah, I know that it's too early to say a definite number, but I think it's important for our viewers to say a rough number, that they get an idea, because when you are at 100 tons commercial production, you make money actually.
Absolutely,
right?
And we're there now in terms of it. We just don't have the final numbers that will be released to the in the proper course
Yes,
of our releases.
Yeah.
But we're getting there,
Yeah.
and we're very happy with the progress we're at. Most importantly, we're getting the mill to where it needs to be, and 100 tons based on all of our inputs and our costs, we should be, you know, a solid business.
Perfect. Input, that's one of the keywords
Yeah,
I was
input is
waiting
very
for,
key.
because you need input for the mills. Otherwise,
Correct.
you cannot process.
Correct.
What is the situation now with the ore buying? What are the grades you have
Yeah.
done so far?
Yeah.
How much have you secured on a, let's say, whatever monthly basis or per day basis? Because when you operate with 100 tons, we talk about 3,000 tons a month.
That's correct.
Right?
Yeah.
So what have you secured so far? What do you think you will maybe then purchase on the open market?
Well, here's our strategy. We want to have half of our capacity under what we call letters of agreement, and they're like contracts. And the letter of agreement with one of our mine suppliers, the mine will get a preferred pricing if they, so that, because they're the ones that are bringing us 100, 200, 300, 500 tons of ore per month. So it's a regular source, and you want that stability in your business model. So we've got very close to 50% now. We've announced a number of those contracts, so we're there now, and we want to secure that portion of the ore, and then we'll buy in the open market, which allows us to buy high grade. But our objective is to try to get the highest grades possible. And we've been surprised that we've been able to secure the grades that we're at right now, which is, you know, 0.7, 0.8 ounces per ton.
Yeah.
And it's been consistent. But again, you know, the one thing you have to say in this business is that the past isn't necessarily going to be the future.
Of course.
But you know, you'll see over the coming quarters where we'll be able to completely, you know, lay those numbers on the table for everyone.
But it sounds to me quite positive, because when I went through your presentation, you were calculating with half an ounce and 0.8 of an ounce.
Yeah.
So you are closer to the
Yeah.
better end, to a higher end, right?
Yeah. Well, again, our numbers work at the lower numbers,
Yeah.
right? We don't have enough historical data to really get too comfortable with those higher numbers quite yet. And we've always been a company that tends to be conservative in our estimations, because we run a business, right? And you know, there's so many variables that go into this, and we're just starting out, but looking pretty good so far.
Perfect. And through the last financing, I presume you have now enough money, let's say for the next 6 to 9 months, whatever, to bring up the business to the 100-ton commercial, to secure the ore, and to generate cash flow.
We can grow organically from here. That was the key, was to get our company off the need to continue to raise capital to get us into this business model, and we should be there now.
Okay.
And so we needed some, because of the grades of ore, et cetera, we needed to make sure we had the secure ore that can take us up and sustain ourselves, because the greatest expense in this business is the inventory of the ore. It can take up to 60, 65 days before we're paid from our product after we've purchased the ore. This is the nature of the ore processing versus toll milling.
Okay, super. Can you comment a little bit on the, let's say, longer term view? Yeah, now you have this production facility in Chala. Do you have any plans, let's say, for next year to get a second plant?
Absolutely. We've made no secret that we are not in the business of one mill, right? We see the opportunity in Peru for a lot of more companies and a lot more mills within our family and portfolio, and we're going to be looking extensively all throughout Peru. We're going to stay in Peru. But we're looking extensively through Peru now to find out where that next mill could be. But again, there's lots of things that you've got to go through before you identify the second one. We've learned a lot from this mill, and
which is good when you learn.
Yeah, and what we, you know, there's a few things we'd have done differently. None of them was big mistakes. The one thing about having small projects, you make small mistakes. But we'll look for a multiple mill strategy, and we'll be looking to expand or buy. But that's really what. And then also under the Small Scale Mining Act, the Chala plant can be taken up to 350 tons. So we'll start looking very soon to make those applications to take this plant from where it is today, which is 100 tons, up to a multi-100-ton operation. And again, That will probably happen over the next 12 months. It takes some time now to get these things, because in the small scale sector, the government is now bringing in higher standards, which is great. And
you are fulfilling already, I
absolutely. We like the new rules. They're fair. And they're reasonable time frames. You're not looking at multiple years to get things done. You're looking at multiple months, which is works fine. And still, we still have lots to do with this plant in order for us to get there anyway. So it'll be just a company that just plods along, and with the attempt of adding more tonnage of production, both in existing and new mill strategy over the next 3 to 5 years with the Inca One Gold model.
Fantastic. George, thank you very much.
Thank you very much for having me.
I'm sure we hear in the near future a lot more, hopefully. Then.
Yeah.
And I look forward to your commercial production.
Thanks very much.
Better sooner than later. Yeah. Ladies and gentlemen, it was George Moen, the COO of Inca One Gold. Well, you heard it. Commercial production is coming, hopefully, whatever, in the next quarter. And yeah, the company will be profitable, or let's say has a break-even point, something around 50 tons a day. They will go to 100 tons per day in the commercial production. So you see, the company will definitely make a positive cash flow this year already. And we will see, maybe if a profit is left, I would be happy also. But the point is, the company is generating now cash, and it helps the business. It helps to grow the business organically. And also, as George said, they want to expand Chala One also, and they can imagine for next year to go on a second facility. And we will see what happens. So far they delivered. I'm pretty confident that they will do this in the future. Thanks, and bye-bye from Munich.